Hello and welcome to Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. We're looking at a pretty significant gain in European stocks this morning, significant around halfway through the midpoint of the morning, largely because we had an enormous change in investor and analyst expectations for Europe's largest economy, Germany, measured by the ZEW this morning. That index of expectations came in at 48.2. That's about 17 or 18 points higher than first anticipated, the highest in almost 3 years, and does suggest we might have a better than expected recovery again at the core of the Eurozone. Now, the difference between Germany and France is still a major concern for investors, and France hinting today that they may have to taper off their assumption of budget deficit targets for this year and indeed may trim back their estimate for economic growth at the same time. So the difference and the different speeds of growth in and around the Eurozone are still something that investors are going to have to calibrate. But nonetheless, that strong number out of Germany did lift stocks around the region and help push the FTSE 100 as well into the green, at least for the moment. Now, other stories we're looking at, one coming from the European Union, where they're debating at the moment about how to perhaps cap bankers' bonuses going forward. Many suggest that that's really only going to mean a much larger increase in base salaries for those working in the finance industry, at least at the highest levels. But nonetheless, we seem to be getting closer to consensus agreement about exactly how enumeration is going to take place in that industry. Here in the United Kingdom, we're looking at comments from David Cameron, the Prime Minister, speaking in India during his 3-day visit to drum up business about RBS, the state-owned lender. He says the bank needs to do a little bit more and accelerate some of its restructuring plans in order to make sure that the bank is getting faster to a point that the government can exit its 82% stake. Now, he left the door open for perhaps creating the conditions for a share giveaway to taxpayers who, of course, had to pay around £45.5 billion to rescue the bank back in 2008. But he did say it's probably a little bit too early to provide details exactly on that. We'll watch that story with interest. Another story we're watching today, Intercontinental Hotels Group, the biggest hotelier in the world, beat expectations for its full-year earnings and surpassed revenue expectations. But the fact that the stock was at record high yesterday caused investors to pull back a little bit today. Another case of sell on history, and therefore we're seeing the shares down a little bit more than 2.5% today. Do check all of this out, please, on the economy page. We'll see you tomorrow.